Hi, everybody. I'm Marlin Bohling with you. Thanks for joining us as we take a look at our market activity here on a Wednesday. And with me, I have Oliver Sloup, and he is Vice President of Blue Line Futures. He's located in Chicago. We're going to take a look at what was driving the markets. And as we got to midweek here, it seemed like we had a big sell-off in the grains. They just really fell out of bed right from the starting bell this morning. And then by the time we got into the noon hour, it seemed like things kind of clawed their way back here, Oliver. If you want, we can maybe start talking about that corn market because I was impressed with the way it finished the day.
Yeah, absolutely. For the start of the session, really overnight and into the early morning open, it was just more of the same. The slow bleed lower with very few upticks, and we really saw that selling continue, taking D's corn, that new crop corn contract below that psychologically significant $4 level. And then, midday, we started to see some buyers step in down there and talking with some clients who work with a lot of end users. They were stepping in with D's below $4. So you started to see some buying activity into the close. Still finished a little bit lower on the day, but it felt like we were up 10 cents on this session with the upticks that we saw. So, kind of looking at some of the charts. And here we are. So a nice little tail off of those lows, and I think that bodes well for what we're looking at going back into the end of the week. I think the big question from these price levels is how much upside is there from here. So we're looking at previously important support points, 407.5 right here, up to about 410. That was old support. That's now going to be resistance. The bulls want to see consecutive closes out above that pocket to make it a more meaningful and sustainable relief rally, potentially getting us back towards some of those moving averages, which you can see are still well above the market at this point.
It was interesting to me when you looked at the way the market acted on the corn. We had new crop December taking out the $4 benchmark. And I was kind of concerned when it did that, if that would really start picking off stops below that. I mean, you would think there had to be a bunch of them there. Now, it might have been buy stops underneath there. But it did seem to really feed on that for a while, and then it kind of held its own and firmed back up again. Do you think it harvested all the stops that were sitting there?
Yeah, I was thinking the same thing. I thought that we'd see more like a panic and capitulation once we tripped stops below $4, but it really never reached that point. And it seemed like it was searching for those stops. I think it probably did a pretty good job at getting people to throw in the towel who were looking to try to buy the dip over the last several days and just haven't been able to do so. So now we're at a point into the end of the week where we want to see some momentum off of today's reversal, off of the lows. And again, it felt really good, but it was only 4 or 5 cents off the lows at the end of the session. So we really need to see some follow through into the week. We've got export sales out tomorrow morning. Hopefully we can continue to see good numbers there from the corn and help that momentum build into the weekend.
Now, soybeans, they had a kind of a tough session there, and it looked like they went down on the new crop and actually tested a long-term channel, the bottom side of a channel, but it seemed to hold. And there again, they kind of bounced off of that a little bit toward the close, not quite like in corn, but were you encouraged by that?
That was encouraging. 982, we were looking at that here in the office, is that downward trend line. We were able to hold that almost to a T. I'm still a little bit skeptical on the soybean market unless we get a meaningful weather development and story, which could potentially happen in the next couple weeks to the next month, which is really go time for soybeans, right? Without that story, though, I'm concerned that we continue to see more downward pressure and rallies really stall out above $10. That's going to be the big area to keep an eye on. $9.96 to $10, that was old support. Now resistance. We tried to poke our head out above there yesterday. We tried again this morning, but we marked lower highs. And we did hold that trend line support today, but if we go revisit that and take that out, then we're looking at the April lows and December contract lows, 961 to 971. So again, until we're able to see consecutive closes out above that $10 level, I think the bears have full control in this market. If you do want to play to the upside, I think use limited risk. We like looking at some different option strategies for that.
Well, August is the month to focus on for soybeans, I guess.
Yeah, that's absolutely right, and it's going to be interesting to see, what what the yield projections are coming out. We've heard some big yield estimates coming out from the corn market. We saw StoneX with, I think, a 188.1, well above where the USDA is at. It'll be interesting to see. We're headed out on the Pro Farmer Crop Tour, which kicks off on August 18th, and it goes to the 21st. And we'll be doing a lot of live updates from the field on our route on the Eastern Tour, which starts in Ohio, goes through Indiana, Illinois, Iowa, and then up to Minnesota. So if you want to stay up to date with what we're seeing along our route, head over to bluelinefutures.com, and we've got a page dedicated to the crop tour. You can sign up and get those live updates that way.
Well, on the wheat side, it looks like we made new lows for the move in Kansas City and also in Chicago. However, here again, they came off of their lows of the day. Maybe a little bit of silver lining. What do you think here?
Yeah, wheat and corn have really kind of been trading at the hip. So we were talking in the office, if we can get one of those markets to really stage a more meaningful relief rally, potentially they can start to feed off of each other and work in tandem. The wheat market arguably been under a little bit more pressure and more dramatic in pressure than what we've seen in the corn market. But today's price action was encouraging. We're able to trade back into positive territory after marking new lows for the day. So, again, going into the weekend, the important thing really from here is to see some follow-through on the reversals that we saw in corn and wheat. If we're not able to do that, the bears are going to go into the weekend pretty comfortable. But if we are able to get follow-through on Thursday and Friday, again, potentially you start to see some shorts say, hey, you know what, we've made a pretty good trade here on the short side. Let's clean some things up ahead of the weekend and see what next week brings.
Well, and here we have the livestock trade going at it again on the cattle. Big gains once again here on a Wednesday. There seems to be no top to this market. What do they call it? Acrophobia, fear of heights, when you get up high like this?
That's exactly right. I'm going to pull up a live cattle chart here, October live cattle. Just continuing to move back to the upside after defending that 20-day moving average really well, really at the end of last week and to start this week's trade. The cash market continues to be very, very strong. We've got August futures and delivery, so you're starting to see that convergence really take place between cash and the futures market, and I think that's really what has propelled the strength here in the last two sessions. How much more upside is the question that we continue to get, and unfortunately, I don't have that crystal ball. I keep comparing it to a game of like pin the hail on the donkey. You can throw a lot of numbers out there, but in this environment, it seems anybody's guess is as good as mine or yours. So it'll be interesting to see where this takes us. I think the interesting point here, though, is that this rally that we're seeing is now in a time of year which has been seasonally weak. August, over the last, you can look at 5, 10, 15, 20, 30-year price averages. August is historically one of the weaker times of the year for the cattle complex. So whether or not those seasonals kick into play or not is still to be determined. But with that in mind, I think looking at downside protection is very, very prudent at these levels, especially with funds positioned the way they are right now. The notional value of the contract is way bigger than what we're used to. So again, I like looking at the options market for that exposure, or if you're going to use futures, maybe tie it off and tie up those loose ends with some calls to protect the upside risk.
And again, kind of like yesterday, I guess, the hogs are kind of bringing up the rear here. It's like the cattle are just sucking all the oxygen out of the room here.
The hog market was pretty choppy today. We were joking around. It's almost like all the hog traders are just kind of sitting on their hands watching all the cattle movement that we're seeing this week. I'm kind of in limbo with what the hogs want to do at these price levels. Looking at the October contract, that's where a lot of the volume is. I think we're probably closer towards the upper end of the range. But it's one of those things, again, where if we continue to see these beef prices rise going forward, I wouldn't be surprised to see that maybe take lean hogs a little bit higher with it as people look for cheaper alternatives out there.
On the outside markets, the equities were kind of mixed over there. One thing I know you and I have talked about in the past is a lot of folks watching these precious metals for signs of a move there. And what did you see happening there between gold and silver today?
Well, gold was under pressure in the overnight trade. It made a nice rally back. We got some headline risk with regards to tariffs that really brought gold back up higher, and then silver as well. We traded right up to near 39, just shy of that in that December contract. The 20-day moving average comes in just above that, which has really been, I think, a key indicator for a lot of commodities out there. So that 39 level for silver is going to be a big barrier to get out above that. You're looking at that psychologically significant $40 level. I'm still pretty optimistic on the precious metals going forward, even after the run that they've had over the last year and a half. I think central bank buying probably continues, and just a general focus for some of these industrial component metals, as well as a safe haven asset, which gold obviously brings a safe haven asset. Silver, you can get some spillover from the safe haven, but you also have the industrial uses as well. So I'm still optimistic. I'd love to be a buyer on a dip. How deep those dips get is the big question, though, going forward.
Some big names out there in the industry have been talking about they think there may be more potential for a big move in silver, more so than in gold, relatively speaking. What do you think about those comments?
I've been thinking that for quite some time. The thing that really got me interested in the precious metals market was the last bull run in 2011, where we saw gold ripping higher, and then silver. When gold made new contract highs, silver was at $50. We're still well below that, and gold is well above those old contract highs. So, in theory, looking at the gold and silver ratio, silver still has room to play catch up, and I think we could potentially do that. We've got to get out above $40 and see sustained closes above that, and potentially that continues to build the momentum to the upside. But I'm still a long-term silver bull. I think silver probably has a little bit more bang for the buck relative to gold right now. I think one of the things that maybe has been holding silver back now versus what it did in 2011 is kind of some of those alternatives. I'm talking about the crypto markets. That's gained a lot of attention and attraction. It's probably taken up a lot of money as well for people looking for moves in that market.
Well, it's been fun to take a look at Wednesday's markets here. They weren't all that exciting. They weren't all that positive. It depends on what side of the market you're on. But I really enjoyed talking with you about today's trade, and maybe we can do this again, let's say, on Friday. Why don't we plan on that? And we'll take another stab at this and see how we wrap up the week. What do you think?
That sounds great, Marlin. Always great to see you. Look forward to chatting with you again on Friday.
In the meantime, if somebody wants more information about these markets or to get in touch with you guys, how do they find you on the web?
BlueLineFutures.com. We've got a suite of information on there. Me and my colleagues put out a lot of great information each and every day. We also have a portal which we update throughout the day, so you can sign up for access on that. If you're new to futures and options trading, we have Blue Line University, so there's plenty of courses there. Whether you're interested in precious metals or the ag markets, there's something there for everybody. So again, BlueLineFutures.com. A lot of great information there.
Sweet. All right. Well, thanks, Oliver. We'll talk to you again on Friday. That's Oliver Sloup, Blue Line Futures. That'll do it for today's episode with a look at Wednesday's markets. We'll catch you again on Friday.